Hey everyone, Ahmet here with Down to Trade. Welcome back to our channel where we take a deep dive into the dynamics in the world of trading. With me again today is the ever insightful Varian Croft. Varian, how's it going, buddy?
Oh, it's going awesome, man. Super excited about today's topic.
Absolutely. And obviously today we're tackling a crucial approach that every trader really should get to know, and that's of course hedging with options. But before we get there, can you give us a quick little rundown on what's been going on in the swing trade room?
Yeah, absolutely. Things have been, with the current market conditions, obviously things have been very interesting. We've been taking it easy in trades for the swing trade room, but the ones that we're taking have been doing really well. We had a great quick trade earlier this week.
Mhm.
Jumped in Monday, out Tuesday for a nice 50% premium capture. It was awesome.
Yeah,
Yeah.
absolutely.
So what about the day trade room, man?
Well, first off, it's awesome to hear about the swing trade room, and obviously, I've been loving it. Being a part of it too. But I know we've been having a great time in the day trade room. As you have seen, we've really kind of shifted gears, and for those of you who might not know, we recently changed our approach to the current market, and it's been working great. The major change we made essentially was shifting our primary focus to risk mitigation in our positions. And don't get me wrong, we always keep an eye on risk, but it doesn't always need to be at the forefront or the main focus of our trade. For instance, back in 2022 and 2023, our main or primary focus was capturing profit, and our secondary focus back then was mitigating risk. And however, here in 2024, we have really seen a major shift, and as a result, we've kind of adjusted a more direct approach to lowering our risk exposure. And in this current market climate, for instance, and it's for a really good reason. And I have to say, it's been working really well. Essentially, we've been entering trades. Well, we've been entering more trades that kind of go nowhere, and meaning that if the trade goes in our favor, we let it run and we take profit after we let it run for a while. But if it goes against us, we're getting out pretty quickly, and so we might get in and out of two or three trades before we have well, we what I mean is we might get in and out of two or three trades that go nowhere before we have a winner that runs for us. So our win rate is lower than we're used to, but our winners are much larger than our losers, and therefore our expected return is very positive. And another way to put it is, I guess when we lose small, but when we win, we're winning really big. And so that's been a fantastic change in the day trade room. But anyways, that's enough of an update. Um, but I really want to get into our topic of the day. Today we're talking about hedging with options, and it's such an important topic. How would you describe hedging?
Yeah, hedging is like insurance. But for your investments, it can protect your stock portfolio from unexpected downturns.
Yep.
And today we're breaking down how to use options to do just that.
Right. So in the trading world, it's all about reducing your risk, especially here in 2024. Like I said earlier, it's all about reducing risk, and think of it as a hedging as a safety net, ensuring that no single market move can wipe out your portfolio. Right?
Oh, yeah. There's many ways to hedge. Options are definitely unique in it. They allow you to protect your investments without having to sell off your assets.
Mm-hmm.
So it's really about balancing your portfolio, not eliminating any of your positions.
Right. Yeah, 100% agree. So you might ask, why hedge? And then, like we've been kind of talking about, market volatility can be a friend, but it could also be a foe. While it can provide opportunities for profit, it can also lead to significant losses. And we've seen that this year it's been much more volatile, although volatility or the VIX index or the volatility index itself is relatively low. We've seen more wild swings in the expected move on a daily basis, for instance.
Yeah,
Um,
yeah, that's right. And that's where hedging comes in.
mhm.
Hedging is not just a safety measure, it's a strategic tool that, when used correctly, can safeguard your portfolio and even boost your returns. Let's unpack this, starting with one of the most popular tactics.
Right. So we can't really take a deep dive into each of these because the video would be way too long, but let's take a look at some of the most popular hedging strategies. First up, my first go-to would probably be protective puts. Think of these as insurance on your stock holdings. So you want to protect your shares that you own on, let's say, Apple. Varian, can you walk us through how that would work?
Certainly. When you buy a put option, you're securing the right to sell your stock
Hmm.
at a predetermined price.
Right.
So that's safeguarding you against any significant drops.
Mhm.
It's like paying for peace of mind, ensuring that no matter how the market tumbles, you have an exit plan.
Right. And again, those are fairly simple. And the next strategy I actually wanted to talk about was, you might remember we took a deep dive into covered calls a few weeks ago. And for those of you who missed it, covered calls is it's a strategy that involves holding on to your stocks while selling call options against it. It kind of serves a dual purpose, right? It's kind of a dual purpose tool, if you will.
Yeah, yeah, absolutely. Covered calls serve as a hedge against minor pullbacks while generating extra income
Yep.
through options premium. It's really a win-win, especially in stagnant or slightly bearish markets.
Yeah, you're generating income, but really the idea of it is to reduce your cost basis, which is huge for your stock holding, right?
Yeah,
Um,
absolutely.
okay, so let's talk about callers. Now, callers are interesting because it's that strategy actually combines both protective puts and covered calls. Can you kind of break down how callers work?
Yeah, with a caller, you buy a protective put and sell a call at the same
Right.
time. This setup really it limits your potential losses and gains at the same time,
Hmm.
but it's creating a safety net around your investment. So it's really an excellent strategy for preserving capital while maintaining some upside potential.
Right. Now, obviously, choosing the right strategy is really crucial. Can what should traders be considering when they're selecting, protective puts, covered calls, or even like we said, a caller? What should they be considering?
Yeah, traders should really evaluate their investment goals,
Okay.
what the current market outlook is, and of course their risk tolerance. For instance, protective puts are great for strong bear market protection, while covered calls might suit those looking for income in a
Mhm.
flat market. Callers, meanwhile, are they're really ideal for those seeking to balance protection without sacrificing with all of the upside potential.
That's probably the best way to describe the approach for each one of those. And actually, I wanted to kind of touch on one of our advanced techniques, using hedging using index options. Now, index options can offer broad market protection. How do they fit into your overall hedging strategy?
Yeah, they're really index options are perfect for when you're concerned about your systemic market risk. So rather than what an individual stock is going to do, they are great for hedging your portfolio over what the overall market is going to do.
Okay.
So by hedging with the index options, you're, like I said, you're protecting against the overall market downturns, which can be especially useful in volatile times.
And you might use this, and I've seen you use this, and I also use it in this way, where you would use an index option or an ETF perhaps, to lower your overall risk exposure to be more delta neutral, right?
Yeah, yeah. Delta neutral strategies involve setting up positions where the delta or the rate of change in price is near or as close to zero as possible.
Right.
So this means the position is largely unaffected by small price movements in the underlying asset. This provides a unique form of market neutrality.
Okay, so there's a lot of terms in there. And I know some of the viewers might be thinking or feeling a little lost here when talking about this, but it really is so important. I'm talking specifically about managing risk exposure. That's how I look at hedging, is really managing risk exposure. And we talk about that all the time at Down to Trade. But really, the good news, this is a great time to talk about this, because the good news is we just recently launched our advanced options program that goes over all of this and so much more. Now, the program, the advanced options program, is 6 hours long, and it will be taught by you actually. So that said, Varian, can you tell us a little bit about the program and
Yeah.
what students can expect to learn?
Yeah, absolutely. So we're going to cover everything from options terminology, understanding the Greeks,
Mhm.
interpreting market sentiment, to mastering portfolio management using options. We'll
Okay.
dive. We're going to do a really deep dive into beta weighted delta, managing your risk exposure, also various hedging strategies. And then also we're going to have a segment in there where we really explore long-term position trading,
Okay.
specifically using options.
Nice.
So this program really, it's your next step to becoming a proficient and strategic options trader. Um, Remember, this 6 hour program isn't just another course. It's a comprehensive live online journey designed for traders who are ready to step up from just intermediate to advanced levels in the world of options trading. So, I mean, imagine being part of a select group,
Right.
diving deep into the complexities and strategies of options, all in a small class size that ensures you get the attention and clarity that you need.
Yep.
With each session, you'll be right there with me in live Zoom meetings,
Right.
creating an interactive, dynamic learning space where every question propels us deeper into the understanding.
I love that description. But it's not just about the live interactions, right? We know how dense this material can sometimes be, especially for somewhat newer traders. That's why each session is actually recorded, giving the student the ability to
Yeah.
kind of revisit or unpack these advanced concepts at their own pace, ensuring no details are left behind, right?
Yeah. The program spans over 4 weeks, with each session being right around an hour and a half long.
Okay.
It's intense, focused, and utterly transformative.
Yep.
But remember, it's also exclusive, only 10 seats per class to
Right.
maintain an intimate atmosphere, really conducive to real learning and growth. So if you're really ready to commit to your success, to truly challenge and elevate your trading, then don't wait, because spaces are limited. They do fill up fast. All you got to do is go to downtotrade.com, click on the live trainings up at the top, and choose the advanced options program.
That's awesome. And remember, obviously for newer traders, we are still offering the options jumpstart program, but I'm really excited about it. You're an amazing teacher, such a skilled trader, and you have really this passion for helping other traders. So I'm really glad that we got this launched. But all right, so let's close out the day with your back test lab. What do you have for us today?
Yep, absolutely. I'm going to go ahead and share my screen here. So
Okay.
we're actually going to revisit something that we checked out last week. So last week we looked at doing what was kind of designated a Monday morning. It's really a double diagonal when you look at it. We kind of called it a Monday morning iron condor while we were looking at it. But for a review, what this is we are selling the 50 delta, both a put and a call, at 2 days to expiration, right at the 50 delta. And then we're buying a put 30 wide, 4 days out, and a call 25 points, 4 days out. And when we looked at this last week, um, the numbers looked really good, and it really piqued my interest in doing a deeper dive into this trade. And so what I ended up doing is I ended up doing a lot more back testing on it. And this is the exact setup that we used on Monday morning to capture 50% premium overnight.
Right.
So what I did in the back testing of this is I was able to go through and modify a few of the parameters. So still looking at it, the setup is still the same. We're still jumping into this trade at 9:35 a.m. every morning, every Monday morning. And all these numbers are just based on one contract. And the big adjustments that I made to this is I set the profit target at 50% and the stop loss at 50%. So now what we've accomplished with this trade is it is now a 1-for-1 risk to reward
Right.
with an 80% chance of probability of
That's
winning.
unreal. That's
So
unreal.
what some of the biggest things that occurred with it is the other setup had a much bigger stop loss, and the win rate was higher, obviously because of that stop loss, but the risk to reward was greatly skewed. And as you can see here, the average winner on this trade with 84 trades is $299, and the average loser is $299. So it's got that perfect 1-to-1 risk to reward on it. But one of the big things that really stuck out to me is the average per trade. So on the last setup, the average per trade was right around $100. So just to give a better understanding of what this means is there's a total of 84 trades. You win on 64, but when you break it all out, how much are you making per trade? So it comes
It's your
out to
expected
about,
return.
yeah,
It's your expected
exactly.
return. And then that's 80% times 299 minus 20% times 299. That comes out to be 178, 179. Yep.
Exactly. So then when you break it down across all 84 trades, you're basically averaging 100 on this one, you're averaging $178 per contract.
Yep.
Where before that number was only at about 100. I believe it was like 100, 105 right in there, which is not bad. I mean,
Right.
that's
No,
not
it's
a bad
fantastic
trade at
return.
all. But when we were able to get it up to $178, I just thought this was a super killer setup, and the risk to reward on it is just, I
Yeah.
mean,
You don't get those. Typically you get a 1-to-1 risk reward. You're typically looking at a 50% win rate,
yeah,
give or take, or
exactly.
maybe 52, 53% if you're lucky. But to get a close to an 80% win rate, that's unheard of. That's why can you scroll down just a little bit to let us take a look at what the profit profile looks like? That's fantastic. Yeah, I mean, there you go.
Yeah.
The proof is in the pudding. And again, like you said, you actually traded this live with real money on Monday, and it worked out fairly quickly.
Yeah. So we got into the trade at 9:35 a.m. Monday morning, and we were triggered out of the trade. When I went back and looked, we were triggered out of the trade right around, I believe it was 9:50 a.m.-ish on Tuesday morning.
Yep.
So just a little over 24 hours in the trade.
I remember premium was a little bit sticky on Monday, and that's just because of what was happening on Monday. But yeah, premium was a little bit sticky, but sure enough, Tuesday morning, all of that volatility got sucked out of the market. I believe that was CPI data, right? Tuesday morning.
It was CPI data that made that kind of stick
Yep.
for the day.
And then once CPI data came out in the pre-market, that volatility contracted.
Yep.
Boom. Quick take
Total
profit.
ball crush, and it
Yep.
was over.
And can you remind everybody who might, and for those who didn't see the video from last week, when if I recall, you're getting out by close of business on Tuesday, no matter what, correct?
That is correct.
Okay.
Yeah,
Is there
if
anything
profit
else?
target or stop loss has not been hit, exit by close of market Tuesday.
Okay. Any other parameters I'm forgetting?
No, that's it.
I mean, that's pretty much it. And there's no
Yeah.
re-entry.
Nope.
Yep.
Nope. It's
Okay.
just a one-time Monday morning trade for a nice 1-to-1 risk to reward.
Okay. I like it. All right. So again, appreciate it, man. And as always, if you'd like to learn more, or if you'd like to see how we use these and other strategies really every single day in our day and swing trade rooms, I invite you to try out our membership for free. Just go to downtotrade.com. That's down the number 2 trade.com. And right now we have some great promotions running. So you really don't want to miss out on those. Again, go to downtotrade.com. Now, if you like this content, do us a big favor and subscribe to our channel. And don't forget to smash that like button. And be sure to leave us a comment below if you have any questions. Other than that, I guess thanks for tuning in. That's going to be it for me. Varian, do you have anything else?
Nope. Just come check us out. Come trade with us.
There you go. All right, everybody. Until next time, This is Ahmet and Varian reminding you to learn it, trade it, and profit. Take care, everybody. Happy trading.